Okay. So somebody comes, we'll get him. Now, as we're discussing, these are the four. So let me see if I can get the whiteboard. Don't see the whiteboard here. So as I was telling that we will try to look at 50%. That is, again, rental is there, but only thing is there is a unrealized rent and vacancy, both are there. Then for the other part, it is business related. So all the business expenditure will be available. And for the other ones, self-occupied 25%. So only interest will be available. Here, all the expenditures to the extent of 25% can be claimed. Now, as far as this is concerned, you'll have to calculate the gross annual value. Now, I'm not going to go into detail because in the material in the Singhania Stakes is done differently. So that you can calculate separately and see. We'll start from there and look at the other expenditure so that you don't waste time on doing the calculation. Just understand the concept and then you can proceed. Now, the part that is let out, so all these calculations they have done and they have reached at gross annual value. I'm not getting into that because all these things they are done differently, that I don't want to do that. You can separately take the question and calculate it and arrive at this figure because it will get confused. Then municipal taxes, again 50% of total 20,000 has been taken. Then deduction under on this net NAV, this is NAV, on that 30% is taken. This is standard deduction. And interest is paid 60,000 total, 50% of it, because this is the let out part. This we are talking about which part? The let out part. This 50% we are talking about. So 50% will be available here. So total amount of income from this let out part is 65,000. 65,000 is the amount from the let out part. Now let us look at the other part. So if you look at the let out is 50%. Now we are looking at the this 25% self-occupied. It is nil. Deduction is 25% of 60,000 interest. That will be available. So minus. What about this business? Business income they have given as 1,40,000. But from municipal taxes, 25% you can get. Repairs, 25% you can claim. Interest, 25% you can claim. Ground rent you can claim 25%. See, even ground rent is available under business. And insurance premiums, 25% on. This is also available. What else is available? Let us see. Depreciation, if it is given, you can calculate. If the value is given, you can still calculate. Because it's business income, you can always take the depreciation. But I don't think it is given here. Data for that is not given. Therefore, it is not considered. But you can write a note here that depreciation is not calculated as the data is not given. Therefore, income from business is 1,02,000. House property income is let out part 65. Self-occupied is 50,000. Income from business is 1,05,000. Total is so much. No deductions is given. Therefore, this is a total income. That's it. Finished. So if you know the problem, you can do fast. That is what I'm saying. Know the provisions well. You can do. And you, of course, you have to read fast. That is a major challenge for you. Only by practice you can get to that. So let us look at the next problem. Is relating to capital gain. So this question was for how many marks? 6 marks. This capital gain 8 marks. So if you look at the pattern, you'll see that almost all questions are 14 marks. First question is full 14 marks. The other one is either it is 8 plus 6, or in this case 6 plus 4 plus 4. Sometimes it is 5 plus 4, like that also they are giving some problems. So you look at the pattern and decide. Okay, just try to understand. But keep the marks in. Why you have to keep the mark in focus? Because 2 marks into 4 means 2 into 1.5 is equal to, you got only 3 minutes. Though you can calculate at 1.5, try to practice at only 1.8 you can calculate, but you practice with 1.5, then only you will get some time for revision to review your answer in the examination. Examine the taxability under capital gains in the following scenario and determine the tax amount and the rate of tax applicable. They are only asking rate of tax. 20th February, 10,000 shares of XY, a listed company, was sold by Mr. B. He sold how much? 10,000 shares. At what price? This one. So your sale consideration is very clear. 550 into 100 is very clear. And STT has paid at the time of sale. These shares were acquired by him on 2017 at rupees 395 by paying STT. On 31st January, it was recognized in the fair market value of thing. So the question arises, should I take this or this? Now, what the provision says now, mind you, capital gain on shares was exempt. But 2 years back or 3 years back, they brought back that into taxability. At that time, they said, okay, what you can do is you can take the market price on 31st January so that at least your capital gain, because the announcement was done in the budget of 2000, whatever is the budget that was announced. But from that date, if you take it in enough, because your cost will go up, you have to pay only capital gain from that date. That is why they have given the date of that 31st January. Now, the question is, if I purchased at more price, can I take the benefit? Yes, you can take. That is what they have given these two rates, mind you. It is not that it's hard-coded rate that you have to take only that rate. If you have paid a price more than that 390, which is on 31st January, you can get it you can take this as your price. And what is the second question? Then we look at the solution. The second question under capital gain is, this is very simple. X, owner of residential property, purchased on 1st September 9 lakhs. He sold the property for 19 lakhs. Valuation of stamp duty value is 45 lakhs. He invested 19 lakhs in NHIA bond. They have given this thing. So the main thing that they want to test is which value to take. Now, obviously, stamp duty value is more than the value at which it was sold. Therefore, this will be taken and you have to calculate the capital gains. How do you do? Sale consideration is 45 lakhs. Index cost will be 9 lakh into 301 by 264. Sir, whether the indexation is correct, you don't have to worry. If the year matches, then you can go with whatever they have given. Don't worry about it. Whether it's correct or wrong, you don't have to check. Whatever the indexation rates they have given, you can take that. Normally, they are giving it in the exam. You don't have to buy heart. So let us look at the solution, how it is done. Now, this is coming under which section? 112A, not 112, 112A. So total 10,000 into 5 lakh 50, 55 lakhs. Cost of acquisition 395. Fair market value 390. Whichever is higher can be taken. This is what is the grandfathering provision you can do. So whichever is higher, he is taking the 395 and Therefore, your long-term capital gain is 15 lakh 50. Under 112, what is the rate? 10%. Please remember this. This is what, if you know, you can easily do 10% on. Why? Because 1 lakh is the exemption is there for capital gain. Anything beyond 1 lakh only taxability will be there. So only on 14 lakh 50, though it is 15 lakh, 1 lakh exemption is available. On that, you have to calculate. Please write a note on that. Don't calculate like this. Please write. They have not written. So 1 lakh 45, education says so much is the total amount. It is assumed that it's not more than 50 lakh, because in that case, with more than 50 lakhs, then surcharge will get applied. Next question. The answer to the next question. What is it we just now saw? Stamp duty value is considered as it exceeds 110% of consideration. All this has to go into your notes. Notes that you have to write this. So that's why 45 lakhs. It is 19 lakhs is there and 45 lakhs. Therefore, this difference is more than 110. Therefore, it has to be considered. And indexation is 9 lakhs into 331 by 364, 11 lakh. Therefore, your total amount of capital gain is 33 lakh 71,000. Now, exemption under 54 EC, no exemption is available. And is available. Now, this is again a catch. So let's go back to the problem and see what is the issue. Now, this I didn't notice at that time. See, I missed out. You have to be careful. That's why each date is important. That means you have to, under EC, is available under EC. When did the transfer take place? 4th September 2020. So you got time till 3rd March 2021. You got time. But he has purchased when? This time. Therefore, exemption is not available. This is where we all will make mistakes. Even when I was reading, I didn't realize it. I didn't see it. But you have to be careful with the dates. That shows that we have to be very careful, because they're testing you. And I'm sure some of you have already told me that, sir, I've done right. But these silly mistakes I have done. I thought it is correct, but it's not so. That's why the only practice will make you perfect. For the exam, you have to practice. Nil. Therefore, total income is so much. Capital gain under 112. This is 112A is only for shares and all that. So 20%. Therefore, 6 lakh. And again, you have to give a note that is more than, not more than, because if he has got other income, that will be more than 50 lakhs. So it's not more than this thing. So normal rate. Otherwise, surcharge will get applied. Okay. Next, another. It's not difficult. See, these are all very simple. If you know the provision well, you can easily do it. But it needs practice. Now, this is another thing which is out of the blue they are asking. Third part, 4 marks. Now, this is also coming under capital gain, but it's under slump sale. What is slump sale? As a business totally is being sold. For how much? Total 40 lakhs. Now, when you sell, if you understand that, if you want to know the business, what is your thing? Net assets is your value of the business, net worth, whatever you call. How do you calculate net worth? This assets minus this liability will be your net assets. Now, in this case, the cost will be calculated like that. Against the 40 lakh, which is the consideration, you have to calculate you have to reduce and find out. But though it is given here, there are certain other information which needs to be considered to calculate the net worth. That's the only thing. And you can also deduct this 80,000, which is paid for brokerage, to calculate the actual value of capital gain under slump sale. So under slump sale, what is it? Total value which is paid for the business as a whole. Reduce the net worth. But calculating net worth, there are certain other things that come into the picture, because some more notes is given. Nothing is given. 10 lakh 50 is your net worth. And one more thing is, it is from the time the business, what time he started the business, that is what is important. He's having business from 25. So from then, when he's selling 31, whatever is the date he's selling, is more than 3 years. Therefore, it will be long-term capital gain, even though these assets may have been less than 3 years. You don't, the purchase date of this is not relevant. The purchase date of individual assets is not relevant for the computation of long-term or short-term capital gain. What is relevant is when did he start the business, and now when he's selling, is it more than 3 years? That is what is important. So let us do it the other adjustments. No individual value is to be considered in the transfer deed. No individual value is considered in the transfer deed. Other assets like trademark, 2 lakhs, 1/4 on which no depreciation has been provided, which was as on 1/4, nothing has been provided. So how to take care? What else is given? Furniture, 1,50,000 purchase on 5/11 on which no depreciation. So all this you have to consider when you calculate the value. Unsecured loan, 50,000 as advance receipt is written off. So unsecured loan includes this. So you should not consider this as your liability because it's already written off. Compute capital gain. So all these adjustments has to be considered. So wherever depreciation is not done, we have to reduce it. So how do we do it? Let us look at the solution. Now, 40 lakhs is the total consideration as a whole. Right? Now, what are the things that you need to consider? Net worth of assets, total assets. So let us see what is this saying. This is the total assets, right? Total assets adjusted for the depreciation of whatever is not done, that needs to be adjusted, and you have to reduce the liability. These liability, what is actual liability that you need to reduce? That is what we are doing in this. So here, total assets is 20 lakhs minus depreciation not claimed, that they are claiming 7,500 on trademark 50,000. Then you get the total assets, revised total assets, because that is to be considered. From there, you reduce the liability. When you reduce liability, these are okay. In bank loan, trade creditors okay, but unsecured loan 1,50,000 is only considered. If you look at the problem, it was 2 lakhs, right? But 2 lakhs, out of 2 lakhs, there was this 50,000 was relating to advance received from wife, which is waived off. So actual unsecured liability is only 1,50,000, which is being now only reduced. 1,50,000 is only reduced, not the entire 2 lakhs. Though in the balance sheet it was 2 lakhs sundry creditors, that out of that 50,000 is not, it is to his wife, he has written off. So actual liability is only 1 lakh. That only should be reduced. Apart from that, how they have done? Total assets, which is given in the problem, less whatever is depreciation not claimed, that is being reduced, less liability. Basically, you are coming at the correct net worth. So correct net worth is coming to 10,42,500. 42,000. And expenses on commission, that also you can deduct. Therefore, your capital gain is so much. Now, what is the note? In case of slum snail, if the undertaking is transferred, gain or loss will be long term. If such undertaking was owned and held for more than 36 months, even if some of the assets in the undertaking are short-term capital assets. In the given case, A is a proprietor of SS. It is transferred on March 31st. The time gap is more than 36 months. Consequently, the undertaking will be taken as long-term, even if some of the assets trademarks extra is less than 36 months. So individual assets is not relevant. When did he start business? Until what date he was holding that business? That will determine the character of the capital gain, whether it is long-term or short-term. Let's move on. Next. Again, beautiful problem. Dharmesh, who is 45 years. Dharmesh is 45 years and his wife, Mrs. Anandi, 42 years. Salary income of 9,60,000. Minor son A, who suffers disability 80U, 3,08,000. So question is clubbing. When you see it itself, you know minor and all coming means clubbing. Whether it should be clubbed or not. Minor daughter, script from television serial, 1,86,000. Garment trading, Dharmesh, 17,50,000. Again, as I'm telling, if you know the provision well, you can easily do it. But there's a method of doing this, which Singhania has done very well. Even in the chapter itself, he has done like that. It's better to follow that. Minor daughter C, 2 on 210 from a friend of Mrs. Anandi on winning this thing, 45,000. Cash received. Income of minor B from scholarship from a school, 1 lakh. So these are all only clubbing issues. So it's all relating to minor, whether it will be clubbed or not. Minor of B, minor son B from fixed deposit Punjab National Bank made out of scholarship income, 5,000. In whose hand it has to be clubbed? Also, that is important. Compute the total income of Dharmesh and Mrs. Anandi is what they're asking. Assuming they have not opted for this. Mind you, again, I'm telling you, practice of free problems with 100 BC after confirming in the direction that they have given for the exam for May, whether this is applicable or not for you, whether questions will be cast like that or not. Just check this thing. They give that, what is it called? Some clarification in that you check. But we practice even otherwise. If they have not given that also, just practice a little bit, 1 or 2 problems with the new scheme also. So let us look at the solution for this. How many marks is this? 5 marks. So that's why I told you these patterns are what you need to observe. 5. The next one may be 5, 5. Now, how this problem can be handled? See, this is a very nice way of now see. Salary of Mrs. X, that is being shown under head. Business of same. Minor son, taxable in his own hand, because it is, what is the thing? It's from his own effort or is disabled. That's why it is taxed in his own hands. So it should not be clumped if it's for a disabled person. Minor daughter scripting from her own skill she has got. So that will also not get taxed. It's all handled in their own hands. Cats is a minor daughter C to be included in the extra minor wealth, not taxable. That's not more than 50,000. It is taxable, minor daughter, but because it is below 45,000 receipt from somebody, that gift is exempt. Therefore, it will not be taxable. Otherwise, it will be coming here. If it's more than 50,000, it will come here. Similarly, minor son of B, scholarship exempt under 1016. So scholarship also, it is income itself is exempt. Therefore, it will not be taxed at all. But in minor income B from fixed deposit, 5,000 less 1,500 basic exemption, 3,500 will be taxed in the hands of that parent whose income is higher. That's why it will be taxed under X, not Mrs. X or whatever, Dharmesh and Anandi, whatever is the name. This is how you should do the problem. Then you will get the answer very correct. So what are they asking? What is the net income of this? What is the income? Why 3,500 is clubbed here? Because of this reason. His income is more. Had her income been more, it should have been clubbed here. Any of them for them. Even this would have more than 50,000 clubbed here. Please take care. Problem in Singhania at the end, the chapter is there. Please try to, if you're not clear, just do the problem from there. Let's look at the next part of the question. Again, 5 marks. What is it? He submits the following information. Salary, 2,22,000. House property in Delhi, Chennai, self-occupied. So this is 22,000 minus 2,50,000 minus. So 2 lakh. Now, what is it? This is for set off. Only for the purpose of set off problems. Purely set off. Set off and carry forward. Let's see the rest. Textile business. 18,000 minus 22,000, another business, speculative. So speculative can be adjusted here only. If this profit can be adjusted with this loss. As far as this is concerned, this profit can be adjusted with this loss. So you have to look at it separately. As far as house property is concerned, what is the assume? These can be adjusted. But of course, there are, whether the limit of 2 lakhs is here or total, that we'll see. So this can be, I think, taken in total, no problem. Only that limit is when you, in set off and carry forward, as a head, when you take it, or at the end, then only there's a problem. You cannot adjust. Not only that, with salary income, you cannot adjust the loss of business and profession. I mean, I'm not talking of speculative. Speculative anyway, you cannot adjust with even this business. This loss can be adjusted. So this loss is how much? 4,000. This loss cannot be adjusted here, but this loss can be adjusted here. If there is any loss. I don't know how much is the loss. We have to see that. Now, short-term capital gain. Again, the gain, long-term gain can be adjusted with short-term loss. Long-term gain can be adjusted. Long-term loss cannot be adjusted. So this can be adjusted. Similarly, betting, this has to be kept separately. These are together. Loss on maintaining, whether it can be, no, this cannot be adjusted with other heads. It's to only be adjusted with the same head. So let us look at the solution. See, this is the way to do it. This is the best way to do it. Under salary, this is coming. Income from house property, all put together, you can adjust and you get a minus 258. Business income, non-speculative, 4,000. Speculative, 28,000 loss. This cannot adjust with anything else. Even with this, you cannot adjust. Long-term capital gain, now this is loss. You cannot adjust with any head. Income from other sources, 80,000. So this is betting, because see, if you look at it, only these two have been added. The one relating to horse races has been kept separately. You cannot touch that. That is given as a note. We'll see that. So that means under salary, you've got 22,22,000. This loss is so much. This is non-speculative, 4,000 loss. Can I adjust with salary? No, you cannot adjust this with salary. This can I adjust? Yes, I can adjust. But maximum how much? Only 2 lakhs. The rest, 58,000 will have to be carried forward. This has to be carried forward. Speculative has to be carried forward. You cannot adjust with anything else. Even capital gain, you cannot adjust. But this again, there is no other thing. You cannot adjust any of them with this because you are exhausted. So what is saying? Gross total income is so much, 22,000 plus 80,000, consisting of salary and income from betting of games. Income from house property loss, that is the loss, is a rupees 58,000, business loss 4,000, speculative 28,000, and short-term capital gain 6,000, and loss pertaining maintenance 14,000 will have to be carried forward. This is what is the thing. So please understand that with what you can adjust. So if you do a table like this, then it will be easy to handle it. This is interhead adjustment, but subject to the restrictions. Now let's look at the next. Enumerate examples where return of loss to be filed before the due date for carry forward losses. Also enumerate this how much? 4 marks. Losses which can be carried forward even though retros can. It is very clear that only for house property and depreciation loss you can carry it forward even if you don't file the return. Other cases, if you don't file the return before due date, it's gone. You cannot carry it forward. That's a theory question. So let me cover this question also, then we will go to the solution. In the following cases relating to previous year, the total of income of or the total income of any other person in respect of which he or she is assessable income tax does not exceed basic exemption, you are required to state whether they are still required to file the return. So they are asking whether they should file the return or not. What are the things that is saying? Let us see. And how much marks they are talking about? 1.5 marks, 1.5 marks, 1.5 marks, 1 mark. So that is 5 marks total. What is it? Manish HUF sold residential house property on which long-term capital gain of 12 lakhs which was invested as and bond in 54 AC. No long-term capital gain. So that means capital gain is there. He has invested. There is no income. Should he file the return? Yes, he has to file it. The gross total income before a deduction of all these cases, certain this thing is more than the taxable limit, he has to file. Under capital gain, it's nil, and totally it's nil means still he has to file the return. Archana, born in Germany, married in India. Her residence status under 666 is resident and ordinary resident. She owns a car in Germany for her personal purpose during a visit to place. So she is born there. She maintains a car there. So as per the rules of this thing, if a resident is owning a foreign asset, return has to be filed. Return has to be filed. Please look at section 139 proviso. That will tell you all this. But these are simple answers provided you know it. Otherwise, you cannot do it. That's very difficult. Same with this also. Sudhakar, who is incurred expenditure on 1,20,000 towards consumption electricity, entire payment is through bank channels. Any amount more than 1 lakh, limit is 1 lakh. For electricity payment, he has to file return of income. This is section B. So this we will cover in the next class. But let us go and see the solution. So requirement to file is DHUF income of SC before claiming deduction under 80C is 12 lakhs, which exceeds 2.5 lakhs. Consequently, SSE is required to file the return of income. Even after claiming exemption under 50, it's less than 255, still he has to file the return. By virtue of fourth proviso to 139(1), fourth proviso, please look at it because there are certain things that are given which will make people to file the return. In the normal course, income illengilum file cheyanam. When they own an asset outside India, a resident and ordinary resident owns outside India, he has to submit a return. This rule is applicable even if the taxable income is less than exemption limit. No definition of asset is given under 139. Car is not a capital asset under the Income Tax Act, yet it is an asset. Therefore, it may be required. So this note, if you write the answer, you will get full marks. This is what they are testing you, whether you are able to know that provision well. Similarly, last one is what? Expenditure on electricity more than 1 lakh is required to submit if its return of income is taxable. That is 1 lakh and more electricity payment is required. So that more or less completes this part of it. We'll same way do in the next this thing relating to the next paper. Also this paper, GST also, and then we'll decide. Okay. So Saturday, please, all of you come back and we will discuss. After that, whether after Saturday, whether to continue or not, we will discuss later on. At the moment, we'll do for Saturday also. that will substantially cover a lot of our areas. Okay. Thank you very much, and stay focused. Try to, as much as possible, cover your syllabus, and you're just a week, but plan it properly. Even this week is very, very critical, because if you take your decisions properly, don't overdo things, don't sleep very late, try to maintain a proper routine. And if you are able to do that, I don't think there will be a problem. Go and cool, be comfortable, and sit and study. Don't, you know, account start again practicing at least 2 days in advance. But in the meanwhile, whatever you need to, like charts and all, which you need to do in income tax and all, keep looking at it. Don't spend too much time, but the charts are whatever important, something, if you are prepared, please go referring it. The notes that I've given, just browse through it. Keep looking at, spend some time for that, because otherwise it will be totally blank before the exam. So try your best. That is what we all will, want you to do. Okay. So thank you very much, and stay connected on Saturday also. I'll stop here. Okay. What is the message? Okay. Thank you. Thank you. In case if somebody is not got any of these, somewhere you missed out because of connectivity or something, please let me know. I will try to see if the recording is properly come, then I will share it at some point of time. Okay. Have a nice day. Bye.